There's a stock investment I made in 2004, and Arvind still doesn't believe that I made the stock investment. And it's this company called IPSCO. IPSCO was this Canadian steel producer. They made tubular steel, stuff that goes into pipelines and stuff. And I ran into IPSCO in, I think, 2004. And the anomaly there was that this was a company with no debt. Normally, when these pipelines are being built, they want certainty of delivery of the steel and the pipes. And so they sign long-term contracts with people like IPSCO. So IPSCO had given guidance that for the next 2 years, we will have $15 a share in cash flow after CapEx, after everything, after taxes. And the company had $15 a share of cash on their balance sheet. So if you add the next 2 years of $15 a share plus the 15 on the balance sheet, it was $45. The stock was like at 42. And now year 3, because this is a cyclical business, those cash flows could go to zero. Those cash flows could even go negative. And so Wall Street, again, looking at the very high uncertainty of this business, kind of didn't know how to price it. And it priced it at 42. So I said, okay, here's what we're going to do, Mohnish. We're just going to buy IPSCO. I have no idea what the earnings are going to be in year 3, year 4, year 5. I just want to own the stock for 2 years and see what the stock price is in 2 years. And so that was the only thinking I did. I said, we're going to have $45 a share in cash on the balance sheet. I cannot lose money at that point. Now, I could lose if I continued owning the shares forever and they started losing money like crazy for a few years. But I said, let's just go for 2 years and see what happens, right? That was all the thinking I did, nothing more than that. Now, one more year goes by, 2005, and the company announces that we're going to have one more year of $15 a share of cash flow. And I said, hallelujah, life is great. And well done, Mohnish, well done. And the stock has now been kind of inching up from like the low 40s, it went to the 60s. And then when they made this announcement, it's now in the low 90s. And I'm like thinking, we have a double in like 15 months. And who knows what's going to happen to this business, So I said, I think I should just take the double and move on, right? And while I was thinking about these things, I wake up one morning and the IPSCO stock price is at 155. And I'm pleasantly surprised. And I noticed that some Swedish company has made an unsolicited offer to buy them for cash, $160 a share. Now, I didn't even wait to digest the news of realities of that deal. I just sold everything. Okay. And I didn't want to do the arbitrage of the 155 or the 160. I said, we're done here. Okay. And then the bizarre thing about the way the world works is this Swedish company that bought them could have approached them 18 months ago and made an offer for $60 a share, and they'd be forced to consider it because it's at a premium to the current stock price. But they show up like after it's already bumped up, and then I think they do a negotiation with the company, and the company rightfully says that 90 is not an appropriate price. You need to give a much higher offer. Otherwise, the board is going to turn this down. And I didn't know any of that. And, it worked out. And again, it was basically the model was the low risk and the high uncertainty, right? And so